Okay. So let's look at what do we look at now? Zona was one.
Anyway,
Get it?
let's do bank. Let's
Zona was
Zona-
let's go there.
Zona kuja munazikunda. Anyway, let's do bank reconciliation.
Bank reconciliation.
Yeah. Lwokuba ninyepanga ngu ninjimanya konka nkajukwerende. I should drop my pride.
Okay. But to do bank reconciliation way,
Wanje?
we gukora bank reconciliation kurungi. It would be better tubanze twareba errors.
So you're suggesting we can do errors first? Okay.
I see this lady is joining, yes.
What's the problem? It is with her phone. But I say as if she has connected.
But she has not connected the audio. Okay. Try now again. Okay, good night. How are those people? Let's meet tomorrow. I'm saying good night. Harriet. Harriet. Harriet.
Did you? Rod, did you make
So,
Ajata.
Harriet. Harriet. Can you hear us?
Direct. Nizakora. It's fine. Direct me. Yeah.
Hello? So,
Yes.
I wanted to see what Harriet is hearing us. I can't, she's not responding. I see she's connecting to the audio. What is the problem? Harriet, please speak to us.
I'm getting you now.
You're not getting that. Eh?
Yes.
Welcome on the board. Eh?
Thank you.
So let's see his charity. And Kabwe and V. So we are three on the
Okay.
Check the service.
Yes, hello, I can hear you.
You can hear us. Eh? Now we are three.
Yes.
Let's agree on the topic. Because what? How you came in? We had planned to do bank reconciliation. And then there is no way how we can do bank reconciliation before looking at errors. I understand we had looked at those topics with you. So I don't know what you are suggesting, what you are saying. Harriet. Harriet, feel free to unmute. Harriet. Unmute and we communicate. Yes,
It's okay, we can repeat it.
you can repeat it.
Yes.
Okay, no problem. So let's go straight to the errors. We go to the errors. The errors, and then since we are online, we will simply be going through them. When we meet, of course, in our revision, we are going to do all the topics we have to do at least a number. And when we start meeting physically, this time the speed is going to increase a bit because we are remaining with a limited time.
Yeah.
That's so true.
Where time is not our friend, then we will be having these meetings as well, where we cannot meet physically. Then we will be forced to have these meetings as well. We can do them at night, no problem.
Okay.
So let me try sharing this. Try making some sharing here so that we move onward. No. So basically, you remember when we are preparing the trial balance, we are trying to confirm whether there is accuracy in the ledgers. Hope that one you still remember it. So what happens? We said because we are crediting and debiting, when it comes to the trial balance, preparing of the trial balance, what we are expecting is that at the end of the day, our debit side will always be equal to the credit side. Because when we look at, when we are preparing our ledgers, we said we prepare them using the what we call the dual aspect concept. In other words, whichever transaction that occurs, it either affects two accounts. That is the duality concept. Whichever transaction, whichever transaction that takes place in the business is going to have two effects. One account will be credited and the other account will be credited. The other one will be debited. Meaning, if we are preparing our ledgers, if we have followed very well our double entry system, then at the end of the day, our debit side should be equaling to the credit side. That's what we say. So meaning, as we are preparing our trial balance, at the end of the day, that's what we are trying to establish. The accuracy in the ledgers. Is the debit side equaling to the credit side? That is what we are trying to assess. Now, in most cases, that is the assumption is they should be balancing. Yes, the assumption is they should be balancing. But at times, you may find that maybe we made some errors, and our trial balance is not balancing. You could find that there are some errors, and the trial balance is not balancing. That is one scenario. Two, you could find that the trial balance is balancing, but still there are some errors within the ledgers. All those two scenarios are possible. So where we find that the trial balance is not balancing, that means one of the sides is either greater than the other. You may find that the debit side is greater than the credit side. One of the reasons is we find that the trial balance is not balancing. It could be because of additions. You may find maybe you have a cash account. Yes. You could find that maybe on your on your cash account, it was supposed maybe to be 1 million, but when you are adding, you have added it as 900. So what does it mean? It means that at the end of the day, you have taken a wrong figure, a wrong calculation has been made, meaning at the end of the day, the trial balance will not balance. Or maybe you find you are recording on the wrong side of the account. For example, we know that if we are recording in the sales account, because it is an income account, it should be having a credit balance. But you find instead of recording, let's say 10 millions on our credit side, we have transferred it and we have taken it to the trial balance, and maybe we have put it on the debit side. And when we put it on the debit side, yet it was supposed to be on the credit side, what does it mean? It means that at the end of the day, the trial balance is likely not to balance. So you could find the correct rearrangement of the figures. The figure is supposed to be maybe 560, but we have taken it as 650. So if we take such a figure, what does it mean? We have, instead of transferring it from the ledgers as 560, we have transferred it as 650, and that is the figure that we have put in our trial balance. It means that at the end of the day, the trial balance is not going to balance. Entering an item on only one side of the book. So you find the transaction says that we purchased goods from James, purchased goods maybe worth 1 million, and we purchased this from James. But what have we done? We have only credited James, but we have not debited our purchases account. So what does it mean? It means we have credited, but we haven't debited. But at the end of the day, the credit side will be greater than the debit side. So when we do that, it means that at the end of the day, the trial balance is not going to balance. And when this happens, what do we do? Because remember, we are looking at the ledgers of the whole. We are looking at the ledgers of the whole year. Accounting period concept. We are looking at a period specifically of one year. So it means it may be a tiresome work for us to go back to the era, to go back to the ledgers of the whole year, to check where we made the mistakes. And you may find that at the end of the year, we have an urgent need for the financial statements. So what happens? What happens is we are going to create what we are calling a suspense account. A suspense account basically is simply a temporary account that has been created, and it is supposed to be helping our trial balance to balance. It is a temporary account that has been created to help us balance our trial balance. So what will happen is, if we have created a suspense account, it is simply, as we have said, it is a temporary account that is helping our trial balance, meaning once we have a trial balancing, we can go on and prepare the books of accounts. But remember, we have prepared them with a temporary account. This suspense account has come in because there were errors in the ledgers. Meaning, if we get time and go back and we have these errors corrected, the suspense account gets off our books. In other words, it balances after we have corrected the errors. That is a suspense account. So it simply comes in where the trial balance has failed to balance. The trial balance is not balancing. Maybe the debit side, when we add the totals on the debit side, they are giving us 10 million. But when we add the totals on the credit side, they are giving us 9.5 million, meaning this difference of 500,000 needs to go on the credit side such that we have 10 million on the debit side and 10 million on the credit side. So what is helping us do that is what we have called a suspense account. Simply comes in because there were some errors which were made in the ledgers, and because we don't have the time and we may urgently need these financial statements, we are putting it there temporarily, such that it helps us balance our trial balance. We go on and prepare the books, but at the end of the day, when we go back and we check and we correct these errors, we expect the suspense account to get out of our books. That is a suspense account. Any question on that?
No, we can continue.
You can continue. So in the questions, of course, he will tell you that maybe the debit side was more by this. Maybe the credit side exceeded the debit side by this much. So that balance, the balance in the suspense account will depend on how he has set his question. The way he has set his question is what will give us the guidance on how to treat the balance in the suspense account. The suspense account comes in when the trial balance has failed to balance. So when we are correcting, but I think let's first look at the errors which cannot be detected by the trial balance. So although we have said that we have prepared the trial balance and it has failed to balance, if it fails to balance, then we look at the suspense account. The suspense account comes into play. It helps us balance our trial balance, go on and prepare the financial statements, and then correct these errors as we go on. As we get time, check through the ledgers, we correct them. But you may also find that we have prepared our trial balance and our trial balance is balancing. But still, in our books of accounts, there are some errors. And we are saying that these are errors which cannot be detected, the errors which cannot be revealed by the trial balance. And one of them is what we call the error of omission. With the error of omission, this is where you will find that you have purchased, that you have made a transaction, but this transaction has not been recorded anywhere in your books of accounts. It has not been recorded in the books of accounts. So where you find that you had this transaction and it was not recorded anywhere in your books of accounts, it would mean that because it is not appearing, instead of crediting and debiting, there is nothing that was done. We didn't credit, we didn't debit. Meaning our trial balance will still, is going to still balance, but it will balance, yet there is a missing what? A missing transaction. So we are calling that the error of omission. We are calling that the error of omission. Still the trial balance will balance, but with a missing transaction. Then we have what we call error of commission. We have our error of commission. Now, how the area of commission works, you will find that you have maybe personal accounts. This one affects the personal account. The area of commission is affecting the personal accounts. And what happens? Let's assume you are supplying goods. You supply goods, and maybe you have two clients. One is called Mwesgwa Julius, and the other one is called Mwesije, maybe James. So you find you have sold goods to Mwesgwa Julius. If we sell goods to Mwesgwa Julius, what are we supposed to do? Credit? We are selling goods to Mwesgwa Julius. What do we do?
So goods to Mwesije. Meaning
maybe what? 4 million. What do we do? Debit?
Mwesije.
We debit Mwesgwa Julius, and then we credit our sales. So you find that what will happen is, instead of debiting Mwesgwa Julius, we will credit our sales, but we debit Mwesije James. You realize we have credited well our sales account, which is okay. But instead of debiting Mwesgwa, we have debited who? We have debited Mwesije. Because we have credited and debited, it would simply mean that the double entry has been completed. It would mean that the double entry has been completed. We have credited and debited. So that would mean that our trial balance would go on and balance. But remember, we are supposed to debit a different person, but we debited another person. So that is the error. That error cannot be detected by the trial balance, and we are calling that the error of commission. We are debiting a wrong personal account, or we are crediting a wrong personal account. It is a correct transaction, but entered in the wrong class, in the wrong personal account. And I entry the correct side of in the wrong personal account. There is something missing in these notes. Should be a wrong personal account. So that is our
Mission.
our error of commission. Then we also have what we call the error of principle. Now, under the error of principle, this is what affects our real accounts and then the nominal accounts. Remember, we said the real accounts are the accounts which will represent the assets. Then nominal accounts, these are accounts which will represent expenses and incomes. What did we say? We said whenever we have the assets, when the assets are coming in, what do? We debit the assets.
Debit.
When they are getting out of the business, we credit them. For nominal accounts, we say we debit the expenses and then we credit the incomes. That's what we say. So you may find that we have maybe purchased. Let's say, for example, we have purchased a computer. If we purchase a computer and maybe we have used the cash, what are we supposed to say? Purchase computer worth 1.5 million, and we paid this by cash. It means we have two accounts being affected. One
You
is
debit
what?
a computer and
Debit
credit.
computer.
And you credit cash.
Then we credit cash. So this is what we are supposed to do. But you will find with the error of principle, what happens is, instead of, let's assume we have purchased that computer, but we also have an account called maybe computer repairs. We have an account called computer repairs. Now, computer repairs, this is an expense account. It is an expense account. So you'll find that instead of debiting the computer account and crediting cash, what will happen will be, we have credited cash very well, but we have instead debited computer repairs account. In other words, instead of debiting a real account, we have debited a nominal account. Because computer expenses, it is a nominal account. Remember, we said nominal accounts represent the expenses and incomes. So what will happen? We're supposed to debit the computer with 1.5, that we have debited the computer repairs with 1.5, and we have credited our cash with 1.5, which is okay. But now you realize we have debited a wrong account. So what does that mean? It means our trial balance is still going to balance because the cash is correctly credited and some other account has been debited. The trial balance will still balance. But remember, it was supposed to be debited to computer account, not to the computer repairs account. So in such case, the trial balance will still balance, but you realize there are still some errors in our books of accounts. Then we have the error of original entry is where you find maybe you are supposed to write 5 millions, but you instead recorded 5 millions as 500 from the start. Meaning you are entering in your journals, you are entering 500, in your ledgers, you are entering 500, but you would have entered 5 millions. So it would mean the trial balance would still go on and balance, but it is balancing with a wrong amount. You purchased goods of 5 millions, but you are recording them as 500. So it would mean that at the end of the day, your trial balance is going to balance because originally from the books of original entry, from your ledgers, you recorded 500 instead of 5 millions. So that would mean you are carrying this 500 throughout, and the trial balance is what you have transferred in the trial balance. It is going to balance, it has balanced, but with 500 instead of 5 millions. That is the error of original entry. Then we have what we call the error of transposition. Now the error of transposition is more similar to error of original entry, only that when it comes to error of transposition, we are looking at the figures. You could find that maybe you had purchased goods of 764,000. But when you are recording this, maybe you recorded it as 746,000. You are looking at simply the figures. You see the figures have simply changed the positions. Instead of starting with 6, we are starting with 4. So it would mean transposing, meaning the transposing is changing. They have changed the positions. That is what we call the error of transposition. So it means instead of going with 764, we are going with 746, which will appear in our journals, which will appear in our ledgers. And at the end of the day, what does it mean? It means We are taking 746 instead of 764, and 746 is what we are transferring to our trial balance. At the end of the day, our trial balance will balance, but it has balanced with 746 instead of 764. It will still balance. What else haven't we talked about? The error of complete or reversal. Now, the error of complete or reversal is where you find instead of debiting, you are crediting. Instead of crediting, you are debiting. In other words, you are recording on the wrong sides of the accounts. Example in case would be, let's use this, that we had purchased the computer worth 1.5 using cash. We're supposed to debit computer with 1.5 and then we credit our cash with 1.5. But what will happen? Instead of debiting computer, the entry could be entered this way. We debit cash and then we credit our computer. That is error of complete to reverse. So instead of debiting, we are crediting, and instead of crediting, we are debiting. That is error of complete reversal. Any question on that? Yes, Harriet.
It's okay, we can continue.
Okay. So we are saying, where has Charity gone now? We are saying that is the errors which cannot be detected by the trial balance. So after this, we are saying
Chairman,
hello.
Mr. Precious, have we talked about compensating errors?
The compensating errors. We have not talked about them. Compensating errors. What did we say compensating errors are all about? I see Charity is back. Charity, you
Sorry,
had
someone had interrupted me with a call.
I thought you had gone into a commercial break.
I had break. No.
Compensating errors. What happens with compensating errors is where you find that there was a mistake made in an account. A mistake was made in an account, maybe which has a credit balance. An example could be, I made an error of, let's say, of undercasting. Maybe you find that my sales were undercast. The sales were undercast by let's say the sales were undercast by, let's say 100,000. Undercast meaning it was less by 100 what? By 100,000. And what do we know? What we know is the sales have a credit what? A credit balance, isn't it?
Yes.
Sales have a credit balance. And you find the same mistake was made, let's say, in rent. We know rent is an expense. And the expenses have debit what?
Balance.
Debit balances, isn't it? So we are saying what will happen with compensating errors? Sales are less by 100,000, and rent is also less by 100,000. Meaning the error which was made in sales has now been compensated. It has now been, which other word can we use?
Cancelled.
It has been,
Cancelled, maybe.
it has been cancelled by the error that has been made in rent, because sales have a credit balance and rent has a debit balance, and all the two accounts are less by 100,000. It means they are going to, the error is cancelling the other one because they are on different sides, of course, which is not common. But if it so happens and you find it is the same amount on the credit side, and the same error has been made in a different account on the debit side, that is what we are calling a compensating error. Or alternatively, you could find you made an error, an undercast of an account of, let's say, receivables. Receivables, these are our debtors. They have a debit balance.
Debit balance.
They have a debit balance. Let's assume they were less by 1 million. They were less by 1 million. And you find you have another account of, let's say, purchases account. You know, purchases account also has a debit. It has a debit balance. So you find that now the purchases, the receivables were less by 1 million, but purchases, you have made an error and they are more by 1 million, by the same figure. So what does it mean? The other one was less by 1 million, but this is more by 1 million. So you realize the error cancels, the error in the receivables is being cancelled by the error that has been made in purchases account. The trial balance is still going to balance, but it is balancing with errors. So when that happens, that is what we are calling the compensating errors. An error has been cancelled by an error made in a different account. That is the compensating errors. So these are the errors that cannot be detected by the trial balance. They are there in our books, but the trial balance cannot detect them. Where the errors that can be detected by the trial balance, they are those ones where the trial balance will fail to balance, and when it fails to balance, we have said we create what we call a suspense account. We create a suspense account. But in his questions, when he's bringing them, he will combine all the types. He will not specify.
You even look for an L and you don't see it.
Yes.
They combine them and you look for an L and you don't see it.
The error will always be seen. We'll combine them and we told you that we prepare the suspense account, then the correct the errors. Can we look at the question?
Yes.
Do we still have our analysis sheet? The one which had questions.
Yeah.
Roll up.
Get us one number and look for it here.
Where is the other sheet you kept yesterday? The one that you wanted to.
So let me see. Let me see whether I have it here.
Remember to flip it. I thought you forgot it.
When you reach there first, you say amen. No, when we are in the church and you are looking for the verse, he tell you that whoever reaches there first should say amen. So whoever gets the feet first should say amen who are there. Such a way you can look at how he asks that question. We go
Which
through it.
question?
Errors and I think correction of errors. So you tell us a question and I can download it here. I don't
You want
see
any
many.
question?
Any.
Any?
As long as it is on those areas.
Okay.
On that analysis, you pick any. I see 2022 has been also loaded. It is on.
They wrote for last errors by the way. They did.
It's also on the photo. So make sure you.
We can also do question 3, March 2021.
March 2021.
Question 3.
So now that comments are out, now that March 2022 is out, then read the comments. Read the comments. When you read the comments, it gives us a picture of what we need to expect. Then, so we said this is March 2021. March 2021. Okay. Let me download it here. Here we can share. Only downloaded the comments. Question 3.
Oh, brother.
So feel free to read those comments. I will share them. March 2021. Because the paper where you find the number that was poorly performed, in most cases he tries to bring it back. He picks interest in it. So let me share this. No. Okay. So we have March 2021. It is question 3. So question 2, this was what? Question 2, these were financial statements. But the financial statements relating to what? Provided for the year ended, okay. So question 3, here it is.
Yes.
What is he telling us? Required. Show the journal entries, correct the above errors, ignore narrations. Prepare
Are you
suspense.
on March 2021?
March 2021.
Question what?
Question 3. March 2021. Question 3. You can as well share this in the chat.
I've seen.
You have seen it, eh? Okay. So we are saying, whenever you see the question, first to read what is required. Eh? It gives you proper planning. So in what we are required to do, tells us that we should show the journal entries, correct the above errors. 2. In the journal entries, we are basically asking us to show which account should be debited and which account should be credited. That is what we are just required of doing. Now that in this, he did not require us to narrate, then we don't need to give the explanations. When we are correcting the errors, we are supposed to keep this in our mind. 1, we need to know. Once you read the statement, then you should be in position to know what was done, what was supposed to be, what was supposed to be done. This is what when you read the statement, for example, when they tell you, like let's look at number 6, they are telling us a check of 5.6 million is received from ADETA. Now, when you read that statement, when it is a check received from ADETA, what should be done? We are receiving a check, so what should happen to our bank account? It should be, yes?
Credited.
A check of 5.6 received from ADETA. ADETA is someone we have been giving goods on credit. He's now paying us.
You have left sales and what? And debtors.
Yeah.
There are two
Let's
accounts.
we are at number 6. A check received from a data. Let's first stop there.
Mm.
When we stop there, if we have received a check from the data, which transaction should we have entered? It is also
When you
receiving a
receive
check.
a check from a data, meaning the bank gains.
We debit to the
bank
data,
Debit.
the data.
No. Anyway,
Tell them.
my
Tell
thinking
them.
is
Mm.
when a data is someone, I think, with demand money and is
Yes.
supposed to pay us. So I think he pays by bank, and that is a check. So meaning the bank receives money and the data loses.
So what do we do? Debit
Bank
the bank,
and credit
then we credit
the data because he's the one who has lost.
the one who has paid. Yeah. Now here the data is the one giving us a check. It is
Yes.
also receiving the money. So our bank account is receiving.
Yeah.
So when when it is receiving, we should debit our bank and then we credit our data. Now that is what was supposed to be done. We can now continue. Was debited to the bank account and credited to the sales account. Are you seeing that? What was supposed to be done? We were supposed to debit the bank and then we credit our creditor, our data. But what was done? It was debited to the bank account, which is okay. The bank account has no problem. It was debited normally. So the bank account has no problem. But where is the problem? Instead of crediting the data, we credited the sales account. We credited the sales account. This is what was done. So I've been telling us that when you are correcting these errors, one, you need to know what was supposed to be done. So we have seen that what was supposed to be done was to debit the bank and we credit the data. But what was done? What was done is they debited the bank but credited the sales account. So where is the error? The error is the bank is okay. Debiting the bank, we have no problem with it. But crediting the sales, it is where our problem is. It is where our problem is. But you realize that in whatever they did, they debited and credited. What does it mean? It means such an error cannot be affected by the trial balance. Because we have credited and debited, our trial balance will still balance. Our trial balance will still balance. But instead of crediting the data, we credited the sales. You still remember how we called this error? Yes? Which error did we say this is? Error of what?
Error of principle.
Error of principle. Good. So you realize that data are our assets. And then the sales is a nominal account. It is an income account. We're supposed to credit the real account, but we instead credited the nominal account. So in this, what we have done is what we call the error of principle now. Only that here you had told us to ignore the narrations, but if we explaining, we would say the error of principle corrected or rectified. So this is what we are supposed to do. Read the statement, know what was supposed to be done, then discover what was done, and then number 3, what should now be, what should be done. After realizing that they made an error, how do we correct it now? How do we correct the error? For example, when we look at this, the bank account was debited, which is okay. But instead of crediting the data, they credited the sales account. So it means in the sales account, we have 5.6 million on the credit side, which is not supposed to be there. So what do we need to do? We need to cancel this 5.6. And in accounting, when we are canceling, we write on the opposite word, on the opposite side. Yes. So this would mean that we have debited our sales, and what should we do? We credit the account that was supposed to be credited. And which account is this? Is our what?
Which account?
We have debited the sales, cancel the mistake that was done, and then we now credit our
debtors.
Our debtors account. So that is how we correct the error. Now, what was supposed to be done? That's why we first stopped at to receive the check from the data. When we receive a check from the data, what do? Debit the data, debit the bank, and credit the data. But what was done? What was done is they debited the bank, which is okay, and credited the sales, which is wrong. So the sales are credited with 5.6, but we don't need that 5.6 there. We cancel by debiting the sales, and then we credit the account that was supposed to be credited, which is the debtors account. So that's how we do. I wanted to show you how we should be, how we go on correcting the errors, and knowing that this error may be affected the trial balance. This did not affect the trial balance.
Yes.
So when we look at the question, they are telling us that the accounts assistant of Excel Limited prepared the financial statements despite the existence of a suspense account balance of 40,150,000. So the moment you see this, that should tell you that the trial balance failed to balance. Because we said the suspense account comes in where there is a problem in the trial balance. The trial balance is not balancing. So it means we went on and prepared the financial statements, but with some errors which had been detected by the trial balance. So when after knowing that, you realize now in what he has told us, he's saying us that the suspense had a balance of 40,150,000, but he has not specified which balance was it. We have to determine whether it was a credit balance or a debit balance. Let's continue and see. The statement of financial position as at 30th June 2020 is provided below. Where do we have the suspense account? We can see the suspense account. We have it in the assets. It is in the what? In the assets. So the moment you see it in the assets, then we go back to our ads. If they are assets, what is their normal balance?
Debit.
They have a debit balance. They have a debit what? A debit balance. So it would mean that our assets account, it would mean that our assets account have a debit, rather our suspense account has a debit balance. This is why he has put it in the assets. That is one. Now, after identifying that, we can open our suspense account and we say that this suspense account has a debit balance, suspense account. So we can say it has a balance brought down, which will be a debit balance of 40,150,000. After identifying that, we can go on to the errors. Can go on to the errors. What are they telling us? On further analysis, the following errors were discovered. The purchases for the period were undercast by 3 millions. We are undercast by 3 millions. What does this mean? It means our purchases account was less. If it is an undercast, it means it was less. Then we need to determine if their purchases account, which balance do they have? Which balance do the purchases account have? If they are telling us that it was less, it means we have to add it back. If they had told us that it was more, then we would be required to deduct. Hope that is clear. Let me hope I'm not confusing us. Charity, your microphone is muted. So it would mean that what are we doing? Because the purchases were undercast, this means our trial balance could not balance. So this is one of the reasons as to why we are having a suspense account. So when we are correcting this, what are we going to do? It means, yes, Harriet?
I beg your pardon?
Because the purchases account were undercast by 3 millions, it means the trial balance failed to balance. It could not balance because the figure that we transferred was less by 3 millions. So how do we correct this now? We
double it.
Let's reread the statement. The purchases for the period were undercast by 3 millions. And undercast means the account was less by 3 millions. It was less by 3 millions. Meaning we have to add back the 3 millions. So we need to know here, if it is purchases account, which side does the purchases account have? What is their normal balance? So we know purchases have a debit what? Purchases have a debit balance. So it means the debit side of the purchases is less by 3 millions. So if it is less by 3 millions, that would mean that we need to add 3 millions back on the debit side. In other words, we are going to debit our purchases account, and then the corresponding entry, because it was an undercast, it means it is one of the reasons as to why we have a difference in the trial balance. This would mean the corresponding entry would go to the suspense account. Is that clear? Yes. Is this clear?
Which Roman are you?
Yes, still on one.
Roman 1, eh?
Yes.
Sorry, I'd gotten off.
The purchases for the period were undercast by 3 millions.
Undercast. I understand it like Baba didn't cover a question. But changes are giving you like something that is a bit less. That is the term undercasting.
That is it. Eh?
Where undercast, where so here the accounts that I think we shall have. We shall have the purchases account that was undercasted. We have to overcast it, take it back to where it was. And by the fact like purchases have a normal debit balance when they are increasing. By the fact that they were undercasted, so we have to again increase them by that figure. So we shall debit purchases with 3 million that was undercasted. We shall again increase them by 3 million. Then with the suspense account, which will be credited with that very figure.
Yes, and the suspense account by 3.
Yeah, but credited because we are increasing the purchases.
Okay. That is it, by 3. So we are crediting our suspense with 3 millions, and then we are debiting the purchases with 3 million. Harriet, do you have any comment?
I was interrupted somehow. You are leaving me behind.
Okay. So she has said we are supposed to debit the purchases and then we credit our suspense account. Roman 1. Then extension to the building that cost 65,560,000 was recorded as a repair. Recorded as a repair expense. Buildings are depreciated at 2% on cost per annum. Is it the first time we are doing this number, or
first time?
Is it the first time we have ever done
the kind of a number or that very number?
The very number. Now let's continue. It's okay.
Yeah, I have ever done it.
It's also
First time.
I think we also did this now. But let's go through it. So we are saying extension to the building that cost 65,560,000. If we first stop at that, if it is an extension to the building, what does it mean? It means it should be increasing the cost of the building. Let me hope I'm not confusing us. So it means, yes? Hello?
Hello?
It's okay. It's okay, you can continue.
It means if if it is an extension to the building, we should have increased the cost of the building. But what was done was recorded as a repair expense. It was recorded as a repair expense, but it was not supposed to be the repairs expense. So what do we do? It means it was supposed to be debited to the buildings. It was supposed to be debited to the buildings, but it was debited to the repairs expense because they debited and credited. Because they debited and they were supposed to debit, it means the trial balance cannot detect this error. The trial balance cannot detect this error. The trial balance will still balance, but which account needs to be debited? It is the buildings account. So what do we do?
You credit repairs.
Credit to repairs and then debit,
Buildings.
and then we debit buildings, and then we credit repairs. But you realize that in what he has given us, he has added that buildings are depreciated at 2% on cost per annum. He has a reason as to why he's giving us this. It means once we, after doing this, then we need to provide for its depreciation, because he's telling us that buildings are depreciated at 2%. It means we have to also recognize this depreciation expense. Hope that is clear. The depreciation expense. So one could say that the figure that is going to the buildings should be less by depreciation. What does it mean? It would mean we needed to get 2%. We needed to get to 2% of this figure. What is 2% of this figure? I think I had my calculator.
Roller. Russell.
2% of 65,560 times 1,000. Me, I'm getting 1,311,200. So it would mean that the figure that we are debiting to buildings should be less by depreciation. So minus 65,560K. I see I'm getting 64,248,800. And then we debit the depreciation because it's an expense, which was 1,311,200. Then we credit to repairs with 65,560. Let me hope I'm not confused. Are we all calculating? Or I'm calculating alone?
You're calculating alone, but we are following.
You're following, eh? Hey, and when you don't calculate, I will confuse you because I will be telling you the figures and you don't see where they are coming from.
Guys, bring me my calculator.
So we are saying that what will happen, some other person could have first done it this way by simply debiting the buildings and then credit the repairs first, but also recognize the depreciation separately. By doing what? By simply crediting the buildings and then debiting the depreciation. Or you can just take it at once. Just debit buildings with the figure
Depreciated.
Yes.
On cost per annum, shan't we have accumulated depreciation here?
Accumulated
Depreciation.
depreciation.
Mm.
Yeah, it would also be possible if you decide. Now, this could be treated in two ways. The first one,
Mm.
Is debiting buildings with 65,560, and then we credit to repairs with 65,560. That is one. That is actually half.
Mhm.
We haven't completed it.
Mm.
Because he has told us that the buildings are depreciated at 2% on cost per annum. We need to determine this depreciation,
Mm.
which is 0.02 times 65,560. Okay. What are we getting?
Okay. 1,300,000.
1,311,000. So this is the depreciation expense. What were you saying? That we debit the depreciation and then
You
we
debit
credit
depreciation and we credit accumulated depreciation. Eh?
accumulated depreciation on buildings,
Mm.
which is okay. So that one would have now completed. That one would have completed it. Debit the buildings with 65, credit the depreciation, credit repairs with 65,560, debit the depreciation, credit the accumulated depreciation. That is one way. Alternatively, some other person would say that is debiting depreciation, because remember this accumulated depreciation reduces the value of buildings in the statement of financial position.
Mm.
Yes?
Yeah.
So some other person would say that let me debit my building with the net book value figure, the one that will have deducted the depreciation. So that would mean I'm getting 65,460 minus my depreciation, which gives me 64,248,800. Then I debit my depreciation with, it was 1,311,200, and then I credit my repairs with a total of 65,560. All these two people, they have correct what? Correct entries. Yes?
Yeah.
They all have correct entries. So whichever is easier, you would go with that. Harriet, do you have any comment on this?
It's okay, we can continue.
Okay, so we continue. Now in this question, I think in our required, we also prepare the corrected suspense account, then the corrected statement of financial position. Okay. That is why he writes this thing that you prepare the statement of corrected net profit. That you prepare the statement of corrected net profit. When such comes in, it means
Adjusted.
or adjusted. In the entries that we are making, we need to know which one affects profit. Which one affects profit? For example, in this one that we have done, you realize we have credited repairs. What does it mean? It means they had earlier been debited. And when the repairs are debited, what does it mean? It means our net profit is going to reduce. Now that we are crediting, it would mean that our net profit is going to go up. So you need to know this transaction, how does it affect the profit? Need to know how it affects the profit, or what is its effect on the profit? Is it increasing it or it is reducing it? Because he likes it, I think that was what 2018 something. Don't still remember the sitting, but he asked the adjusted what?
Yes, even in the last paper, he asked it.
The statement of corrected net.
Adjusted.
Adjusted net profit. Yeah, he likes it. So you need to know the
last paper we did.
Okay. So you need to know how does it affect the profit? If it is increasing it, increase. If it is reducing it, you also do the same. You also do the same. So let's continue and see. A cash receipt of 500 from a data. So when we receive 500 from the data, what are we supposed to do? Debit? We debit?
You debit cash.
Debit cash.
From,
and then we credit our data. But what happened? Was credited to the cash book. Remember, it was supposed to be debited, but it was credited to the cash book and debited to data's account, credited to cash book as 50,000.
That's another error.
And debited to the data's account as 5 million.
So mistakes were many.
So let's look at it. Let's look at it. Now, let me hope where you have somewhere where you are writing. Because we need to do this physically. Is it physically or practically?
Beyond.
So we have what was supposed to be done. Cash
debit cash.
Debit cash.
500,000 and you credited data.
Is 500,000, and then we credit the data with 500,000. But what was done? What was done is it was credited to cash book as 50,000 and then debited to the debtor's account as 5
million.
As 5 million. Let's record all these. We debit our data with 500, with 5 millions, and then we credit our cash with 50,000. If we begin with our cash, if we begin with our cash, we have a credit side of 50, but we don't need it there. So what do we do first? First cancel the 50,000. We are canceling the 50,000. By canceling, it means we are debiting cash with 50,000. But how much do we need on the debit side of the cash? We need 5.
450.
We need 'We have put a 50,000 to cancel the 50 that was credited. That is one. But what do we need? But what do we know? We know that cash was supposed to be debited with 500.
100.
So what,
Mfara na neta.
Emitwaro? Ananeta.
Like it is 500 if you have cancelled. Anyway, that's my thinking.
Which is okay. Now you realize the first 50 that we have put is cancelling the other 50 that was there. So it means we bring back the 500 which we needed.
Those 550.
So it would mean we have debited our cash with a total 550. 550. So this cash account is okay. What we don't know is where is this 550 coming from, but that is the entry that we need. But when it comes to the debtors account, what do we need? We need 500,000 credited to debtors account. But what do we have? We have 5 million. We have 5 million debited to debtors. Debited to debtors what? To debtors account. So what should we do? The first thing to do is to cancel. Let me hope I'm not confusing guys. We need to cancel this 5 million from debtors account. We need to cancel this 5 million from debtors account. And then after canceling, we need a 500 on the credit side of the what? Of the debtors. So in total, on the credit side here, we need 5.5. But where is this money coming from? You realize in the cash account, we debited it with 550. 550. And here we are crediting with 5.5. So it would mean that the first 550 is what has gone to the cash account. Is what has gone to our cash account. So this 550 will say that this is cash. Then here in cash will say that this is from debtors. But you realize we had 5.5 minus 550. We get 4. What are we getting? What are we getting? This is what? 5.5 minus 550.
5.5 minus minus what?
550.
4950.
Now you realize that this 4950, we don't have any other account where it is coming from. Because we have debited our cash with 550, credited our debtors with 550, So it means the reason as to why the trial balance failed to balance, this is one of the reasons. So it means here we'll say that this is from the suspense, from the suspense what? From the suspense account. Meaning the entry would be debit cash is 550, credit debit cash 550, then debit suspense
It's for 950.
950, then credit debtors with 5.5. Credit debtors with 5.5. So this is how we treat this transaction. This is how this transaction would be treated.
That was tricky.
It was a bit tricky. So this is how we would have treated it. Then for prompt suppliers limited had an outstanding balance of 4 million that was paid twice using EFT. The company refunded the overpayment. How do we treat that?
And where is the error? Does it even have an error?
There is no error.
Having an outstanding balance that was paid twice using EFT, the company refunded the overpayment. So where is the error?
So there is no error.
It refunded the overpayment
The
that was
overpayment.
paid twice. They paid twice and the company refunded.
Yes.
There's no error here. To my thinking anyway, I'm not sure.
Yeah, that's the truth. There is no error because they paid and we refunded them. It is okay. Then 5, depreciation of computers of 1.3 was entered in the statement of profit and loss at 3.1. The correct amount was entered in the corresponding account. Correct amount was entered in the corresponding account. Depreciation of computers of 1.3 entered in the statement of profit or loss at 3.1.
1.3, 3.1. I think what we do, we get the difference. Let me see. 3,100,000 minus 1,300,000. They're saying the depreciation of computers one was entered in the profit or loss as that. So I think we first get the difference of the figure that was entered wrongly, which is 1,800,000.
Yes.
So they're saying that correct amount was entered in the corresponding account. So meaning we shall have that, and we shall have the profit and loss account, and what? And I think the suspense account, because I see this is affecting the trial balance. This L is affecting the trial balance. So I think we shall have the suspense account and the profit and loss with the difference of the figure that was.
That is correct. So which account?
Yeah, that is 1,800,000. Which accounts? The accounts that will be affected is the profit and loss account.
What is the
Then
effect?
it
The
will
effect
be,
of loss?
we shall credit it
Credit the profit and loss with 1.8.
with the difference of that figure, 1,800,000. You get
Yes.
3,100,000, you subtract 1,300,000.
Mm.
The figure you get is the one that you take as a credit balance to the profit and loss.
To the profit and
Yes. I don't know if I'm saying a correct thing, but that's I think my.
so we are debiting suspense with 1.8 and then we credit profit and loss with 1.8.
8. No, it is. What if someone brings in a view of depreciation instead
Of depreciation.
of profit and loss? Yes. What if?
It is still okay because you see depreciation. The moment they tell you depreciation is an expense. So this is a debited profit and loss. So even if you said that you are debiting that you are crediting depreciation with 1.8 and then you credit and then you debit your suspense account, still you will be marked. Now
Yeah.
the corresponding account that they are talking about is the accumulated depreciation. It means the accumulated depreciation, it was correctly entered. It was
Okay.
correctly entered in the accumulated depreciation. So that is how we do that. A check of 5.6, I think we looked at this. Do we need to look at it again? No.
No.
Then no entry had been made in company's books for bank charges of shillings 67 debited in the bank statement. How do we treat this?
The first account, of course, will be bank charges.
Bank charges, and then we credit our
The company's books.
debit bank charges and then credit.
I think the company's books, when you compare it with the bank statement, that can be a cash book, maybe.
That would be the cash book, but to simplify the things, we need to simply debit the bank charges and then we credit our bank account.
Wait.
Because in the bank statement, it is showing that we.
So you are ignoring the company's books. No entry had been made in the company's books for bank charges of that. So I thought,
yes.
This manner, if we take bank charges, we shall take the other side of the company.
Of the?
Of the company, let me say, I think bank charges are more to do with the bank.
Yes.
So take the two accounts. I thought we are taking the company's books and the bank side. Maybe the bank side, we can take the bank charges. Then we'll take this side of the company's books, not taking the bank statement and the bank charges as our accounts.
Which books now? Let's be specific. Because whatever we are doing, you know, whenever they tell you company's books, it means a lot.
Yes, it means a lot, but where my view is, when we take bank charges and the bank statement, may I assume that is like one account?
The bank charges and the bank account.
An accounting.
The bank account, not the bank statement, because the bank statement is not our document. It is a document from the bank.
Exactly. So what is our responding account with the bank charges?
Our corresponding account will be our bank account. So it means we are supposed to debit the bank charges and then we credit our bank account.
Okay.
Harriet, are we still together? Harriet seems to have muted. Then
Then 8, they're saying share capital 405.4 million was brought forward in ELA as 450.4. That is, they interchanged the figures. Remind me which L is that?
L transposition.
Okay.
Could be transposition or it could be error of original entry.
So the share capital that was brought forward in error, and that bringing it forward. Okay. So we shall have the share capital account.
Yes.
And I think this figure affects the trial balance. This L affects the trial balance. So we shall have the suspense account and share capital account.
And share capital account. So you see what was transferred, what was brought forward is more. It is more by 405.4 by 45 millions.
Guys, someone put for me the water heater.
It is more by 45 millions. Here we need to know if it is share capital, which balance does it have?
I think we shall get the difference of those two figures.
We get the difference of the two
figures.
Which is may have gotten 45 millions.
Yeah, it's the one I've got. It is 45.
So where do we put it? On the credit or the debit?
We shall debit the share capital.
Debit the share capital.
And we credit the suspense.
And then we credit our suspense. A credit note received from a supplier of 1.1 had only been posted correctly in the supplier's account. No entry, no corresponding entry had been made. How do we treat that? A credit note received from the supplier.
Anyways, what is even a credit note?
Hello. Hello.
A credit note.
Hello. I'm back.
You're back, eh?
I'm back. Where have we reached?
You have not been with us. We are now on
I had muted. I wasn't around.
We are now on
9.
Number 9.
Okay.
So we are saying now these two words will be constant. They will be frequently used, the credit note and then the debit. Now, where you see a credit note received from a supplier, a supplier, where you see a credit note that relates to return
outwards.
Then when you see a debit note, most cases it will relate to the return inwards.
So much.
So here we are saying a credit note received from a supplier, meaning we return the goods and they sent us a credit note. But what happened? So if that happens, we are supposed to debit the sub,
return,
and
you
then we
debit
credit our return outwards. Then we credit our return outwards. But what was done had only been corrected, had only been posted in the supplier's account, no corresponding entry had been made. It means in our return outwards, the entry is not there. It is only appearing in the supplier's account. So what are we supposed to do? We are supposed to include this in our return outwards. Because it was entered correctly in the supplier's account, it means it affected our trial.
I think we shall have purchases affected also by the fact that the what? We have return outwards,
Return out
words.
outwards.
I have a purchases account somewhere.
Not as such. Because you see, the moment we talk about return outwards, no return outwards directly reduce the purchases account.
Exactly. And
So
you go back to the question, we have in our question we have
a credit note received from a supplier.
no, I
Yes.
even purchases.
Had only been posted correctly in the supplier's account, and no corresponding entry had been made.
So what I'm asking, can we ignore that Roman one of the purchases that were under cost?
The purchases of?
Don't you think there'll be some effect on purchases?
On the purchases? This one is not related. It is a different thing. It's a different error.
Okay.
So we are saying the accounts that should be affected should be the return outwards and then the suspend account.
About payables account. What about payables account?
Payables, you see, in the payables account, it was correctly entered there, had only been posted in the supplier's account. There it was correctly entered. But where the missing link is, in our return outwards, it was not put there. We didn't include it in our return outwards. So we now have to include it, and then because we had not included it and we had entered it somewhere, it means the trial balance did not balance. So that's why we are saying credit to the return outwards, and then we debit our suspense account.
Okay.
Suspense account. So there your suspense account should be balancing. Once those entries have been made. Then the statement of prepare the corrected statement of financial position. We will follow the format that he gave us here. But then we will look at the entries that we have made. The entries that we have made, of course, would be affecting these entries here. For example, there is an entry that we made, and this entry was affecting buildings. You remember that? So it means the figure for buildings will change.
That's the depreciation.
Now the depreciation, because it had not been affected, it had not been accounted for, it would mean it is reducing our retained profits. All the expenses that affect the profit will be affecting our retained profits. Then there is where we are debiting cash. Where we debited the cash, it means cash will increase. Where we credited, for example, the bank, the effect will be on this account. Where we were, what else did we look at?
Cash and bank.
Yes.
Cash and bank.
Question 4.
Question 4. I'm just you are done with that.
We are done.
Okay.
So that is how errors will be. That is how errors will be.
What about number 10?
Number
10. The loss of the year ended.
Yes, the loss for the year ended 30th June is this. Now this one, basically this one was not very, very important because he had already given us what? Given us the retained. But where it will be important will be, you realize that there are some transactions. There are some transactions which were affecting the profit. So why is giving us this? Because if it is a loss, it means it reduces the retained earnings. That is the implication. But you could find it could have not been a loss as per se. For example, there was a transaction of repairs of 65 million. Do you remember that? So it means by bringing this, he wanted us to first adjust this net worth, this loss for the period. He wanted us to first adjust it, and then we get the figure that should be added onto this. So it means for us to be able to get the opening balance of the retained earnings that we had before the transactions, we needed to get this 56,763,000. We add back this loss. Because what do we know? If it is a loss, it reduces the retained earnings. But what do we need now? We need to get the opening balance of the retained earnings. And what do we need to do? We have to first add back this loss to get the retained earnings brought forward, such that we can, after adjusting this loss, the figure that we get is what will be added to the figure that we will have gotten on the retained earnings figure. Let me hope I'm not confusing guys.
We need to do this number physically.
You need to do it physically.
I'm sure.
Okay. The parts C, I think. The part C will do it physically. It's fine. But these others we can.
Okay,
we
I'm
can
going.
do. Yes. This one we can do it. Then when we meet physically, we can look at this.
Okay. What else do we need to look at? Oh, we need to rest. Shazinga, Shaisha to next week. I think we can rest.
We can rest and we reschedule our meeting tomorrow the same time.
Tomorrow. But
If
tomorrow I will
possible.
be traveling back. We need to reschedule. I'm traveling at night.
Okay.
And I doubt whether I can. Don't think it would be appropriate in the bus.
So we meet Saturday.
Okay, it's okay. You can
morning
schedule
hours.
yourself and give us.
Okay, Saturday. Okay, let's keep in touch. And Saturday,
right.
we are not meeting physically. This Saturday,
We are not.
we are not meeting. We are not meeting physically this Saturday.
Kare,
Okay,
uraza kubona
let's keep in touch.
uraza kubona utupusi.
Have a blessed night.
Thank you so very much for
Likewise.
today's class.
Okay,
Have a blessed night.
thank you.
Girls, I'll take a shower. I'm done with my class.